Take a real good look at this 1099K form I currently have on screen. Really study it because you're probably going to be affected by it starting in 2022 or at some point in the coming years. Stick around to the end of the video because I have some examples that are going to illustrate how this can affect you as a business owner or even if you're not a business owner. Greetings YouTube, Mike the CPA here with a brand new tax video for y'all. And as I'm filming this, I notice one of my eyes is pretty red. This is what happens when you look at tax forms too long. Don't do it. How do you know if this will affect you? It's really easy. Do you sell items on eBay? Whether you have a whole eBay store or you're just trying to clear some junk out of your closet and sell personal items. Do jobs for Uber or Lyft? Do you have a business where you sell stuff online and receive payments through credit card or debit card transactions? Do you do landscaping or some other kind of service for people and they pay you via Venmo or some cash app? If you do any of those things at all, this could very well affect you. Notice by those examples I just stated that you don't necessarily have to be a business owner for this to affect you. You could be selling personal items, babysitting, things like that, and if they're paying you via these cash apps or PayPal or credit cards or debit cards, then you might very well receive one of these forms and it could affect your tax filing starting in 2023 when you go to file your 2022 tax return. The 1099K form, it's been around since at least 2012. So why haven't you seen it before? Why is this happening now? Prior to 2022, in order to receive a 1099K, you had to have gross receipts of online, or not, I shouldn't say online, but debit and credit card payments or payments through cash apps or PayPal that would have exceeded $20,000 and or had 200 transactions or more with these types of payments. Starting in 2022, right now, that payment threshold of $20,000 has been lowered all the way down to $600. Oh yeah, and it doesn't matter how many payment transactions are conducted this way. It used to be 200, now they've lowered it down to as little as 1. So are you starting to see now how this is probably gonna affect you? Isn't it great? That is such a drastic change. That's like saying, oh, I'm gonna come over and I'm gonna help you trim your tree. But by the way, after I'm done, the only thing that's gonna remain of your tree is just the little trunk. Why did they stop at $600? Well, very likely because $600 is the typical usual threshold for most 1099 type of filings. The way this works is credit card companies like Visa, MasterCard, American Express, and these third-party network providers like Venmo, PayPal, and there's more, but those are just some examples. They help track and report the payment transaction detail that runs through their services because they are payment service entities or PSEs. They provide that transactional detail summarized on a Form 1099K that they provide the IRS. They also provide that same form. They give you a copy as well as the seller so that you can properly report that information on your tax return. But why the big change now? Is it because the IRS wants to give you this additional detail about your sales out of the kindness of their heart? They just want to hold you in their warm embrace? No, obviously not. It's about money.
Show me the money! Jerry, you better yell! Show me the money!
The reason, and the real reason, the IRS wants more people to have this 1099K form is because what they found in the gig economy we're living in, where everybody's trying to make money in all different sorts of ways, they determined that people were not properly reporting how much income they received from these different types of payment methods. If you were already properly tracking and reporting all of your income for your business, as you should have been for your taxes, then your taxes are not gonna change one bit. It's gonna be exactly the same. You're not gonna be paying any more taxes. However, if for the last couple of years you've been skimping by and leaving off some income or not accounting for it properly, you're probably gonna run into some issues. To put it another way, the IRS wants to see that that you are accounting for your income properly. Because when the IRS gets the copy of the 1099-K, and for example, let's say it shows $30,000, when they're reviewing your tax return after you filed it, and they're looking at your business income, they want to see that you've reported at least about $30,000 in income. That way, things match. They're looking for the amount of income you report to be about the same or more than whatever that 1099-K is going to show. For instance, in the second example I've put together for you, this taxpayer is reporting total sales or gross receipts of $35,000. Let's say that they also received a 1099-K that shows $30,000. When the IRS is looking at this, they're going to see that the person reported an amount greater than what is shown on the 1099-K, and rightfully so, because they had $5,000 in cash payments and $30,000 roughly in credit card and debit card type of payments. The IRS would look at this and they would not have any issue because it appears the person has reported all of their income. This example also illustrates that a person can have various forms of cash receipts in addition to whatever amount is reported on their 1099-K. I want to take a moment and to say I hope you guys are enjoying this video. I hope you're getting something out of it. If you are, if you can do me a quick favor and tap that like button, it'll really help out the video and my channel. Thank you so much. The thing to remember with these forms, the 1099-K, is the amount they report on it in terms of the amount of payments. That's just the gross amount. That is not necessarily the amount you pay tax on. If you're a business owner, it's very likely you have other deductions in your business that you have been tracking, and hopefully you're tracking throughout the year, because it's up to you to do that, that you can deduct against that income. But the IRS, the only thing they track is the income piece of it. It is up to you to track the rest. If I were in your shoes and I was a business owner, what I would do during 2022, right now, is I would just make sure my accounting records are up to date. They're clean. I got my income reported as it should be. I know the 1099-K is coming. Well, my books, my records should be pretty close to what that 1099-K amount is. So I should be looking for that. And if it's not, I got to figure out why. Because the last thing you want is the IRS trying to figure out why it's different. So make sure your books are up to date. Make sure your records are accurate and know why, if there's any differences, and have the receipts and documentation to prove it if there are real discrepancies between the two. Now, unfortunately, where I see this creating headaches for people is for those people who are not even business owners. And that's because of the low $600 threshold. How easy is it to sell $600 worth of your junk on eBay? It's not that hard. Like pretty much anybody could do it, right? There's something you could sell or a couple things you could sell that would get you to that amount. And that's gonna rope you into getting one of these 1099-Ks. Well, you're not a business owner. What do you do with it? Well, the IRS is expecting you to report it. And so you're gonna have to figure out, okay, well, what did I even pay for that? I've had that thing in my closet for 10 years. I don't remember what I paid for it. If you're selling things on eBay that are old, unless it's like very valuable or collectibles, you're probably selling it for less than you bought it for. So if you sell a personal item for less than you bought it for, you're not gonna have any income or tax ramifications from that. When it comes to selling personal items, an easy example I can relate back to is if I were to sell a used vehicle that I own to somebody. If I receive, let's say $5,000 in cash, do I have to report that as income? No. Why? Well, because I likely sold that vehicle for less than I purchased it for. In 2022, things are weird, there's supply shortages. Maybe I do sell that vehicle for more than I purchased it for. That in that instance, do I have to report it? Yes. I have to report the income to the extent of the gain. The gain is the amount over what I paid for it. So if I sold it for $2,000 more than it's worth, then I would likely have to report that transaction on Schedule D, and I would have a $2,000 capital gain. But I'll leave it at that. I digress. I'm not going to continue down that path. But just be mindful throughout the year of how many things you sell via credit card and debit card transactions, or through Venmo, or whatever cash app you may be using. One of the best things you can do for yourself when it comes to staying up to date with taxes and tax laws is to be subscribed to this channel. I'll be producing a lot more content throughout the year. And I would encourage you to check out these two videos next if you haven't seen them already. All right, everybody, you've been a wonderful audience. Have a great day. Peace.